President Biden meanwhile signing an executive order yesterday narrowly limiting U.S. investments in China. This is supposed to start next year. The order bans new private equity, venture capital, and joint venture investments in chips, quantum computing, and certain AI companies. It also requires Americans doing business in China to report direct investments in those sectors to the U.S. government. China is saying this morning that it is, quote, gravely concerned about the order and that it reserves the right to respond. Joining me right now is Atlas Organization founder and author of The Decisive Decade, Jonathan D.T. Jonathan, it's great to see you. Thanks very much. And you write about this threat in The Decisive Decade, particularly the capital markets threat, the fact that investors are able to buy Chinese companies that are listed here in so many indexes and ETFs, and in effect are able to fund the expansion of communist China. What is your reaction to this executive order?
Hi, Maria. Well, it's important, and it's a very well-written executive order. It actually declares a national emergency to deal with this threat, the threat being advancements in military technology and technology that's relevant to cyber capabilities, surveillance, and the Chinese military itself. So I think it actually sets a groundwork for something that could go far broader and ultimately become a real bedrock of U.S. strategy and policy towards China. So that's all good. On the other hand, it's still very narrow targeted. And again, AI, quantum, semiconductors, those are very important sectors. And I think it shows that the Biden administration has a technology strategy, but I wouldn't call this a capital market strategy. I mean, it's not the same, for example, of what Representative Gallagher sent to MSCI and to Larry Fink that says, hey, look, you know, our pensions and everything are still pouring capital into China. That will probably continue through all kinds of other investment vehicles. But this is starting to, I think, take the broader administration technology strategy and, you know, add a capital markets dimension to it, which means that, you know, if we can slow them down in key technologies, if we're able to secure our supply chains, maintain a technological advantage, make sure that that remains a military advantage for us. That's all good for the United States, but we still have a much larger, much broader economic and military competition with China that we have to win, and that will take, you know, bigger actions.
Well, I mean, look, this is very narrow. That's right, and it is also targeting new investment. So there's so much investment right now in these sectors, and these are long-term contracts. I mean, if you've got companies using Chinese technology or having Chinese companies have access to American technology in AI or quantum, that's already going on. That technology is already embedded. So they're not blocking that, what's already done. They're talking about new money. So it sure is real narrow.
Well, on the other hand, I mean, you want business to respond to this as well, and investors to respond to this as well. I mean, ideally, to win the contest with China, this is about not only government directives, but corporate decision-making and investment decision-making, where we realize that we're going to have, you know, a bifurcation of the U.S. and Chinese economies. I mean, that's starting with technology. But, I mean, if investors and businesses are starting to see the writing on the wall and realize that this is an adversary state, understand the consequences of geopolitics. I mean, Ukraine, I think, helped a lot of businesses see what that means, but to really get that the CCP is planning for conflict in the Pacific, and why would you invest in that? So I think hopefully business decision-making, coupled with the fact that you're having, you know, very clear executive orders at this point. I mean, this one really is, I think, a clear signal to the business community as well. I mean, hopefully we'll start to pull back. I mean, we have seen venture capital and foreign direct investment really, you know, fall off very substantially this year, so that's all good. It's not the same as what's being poured in through, you know, passive investment vehicles such as ETFs and MSCI shares and all the rest of it. But I think, you know, we are seeing changes in the direct investment, and it doesn't mean that companies are abandoning the China market. I think they're just starting to see some of the risks. I mean, companies are still prioritizing the China market, so that's also a separate category where corporate decision-making, I think, needs to take a much bigger look here and realize that at the end of the day, we're going to have to do some level of strategic decoupling, of bifurcation. We're going to have to work on the global economy, so we're, you know, holding these guys back and making sure that they don't surpass us in key sectors. And technology is one very important one, but there are many others as well.
Yeah, I mean, you mentioned the congressional investigation into MSCI and BlackRock stock. Tell us why you think that's important. And I should also point out that China is not sitting back accepting all of this. There's a new oversight push. China's Ministry of Industry and Information Technology announced it will require all mobile app providers in the country to file business details with the government, Jonathan. This is no surprise. They have to report everything to the government. Companies are not, free companies to do what they want, as in other nations. There's a list of new laws that the Chinese government has come out with over the last few years since they marched into Hong Kong. And whether you're an international or a foreign or a domestic company, you will report back to the CCP.
Well, sure. I mean, they're going to make it much more inhospitable to do business. I mean, this is just the nature of their strategy. I mean, they, the real central contradiction in Chinese strategy is that they want, in a way, to dominate the global economy, but also to prepare for conflict and to exert the kind of control, that is, I think, the natural tendency of this regime. So whether it's the raids on different due diligence firms from Bain to others, or this particular initiative from MIT, which asks businesses in the App Store to register what seems to be basic business information, sort of address and basic information, but still the effect that is anticipated here is that it's going to limit the number of apps in the App Store in China. And of course, many Western apps are already banned in China outright. But there has been a, by definition, difference and bifurcation in our technology sectors anyway. If you see, how our tech companies are not able to operate in China, or how they're directly defeated. I mean, you take the Didi Uber examples, or Alibaba and eBay back in the day. That's always been there. But now I think the level of control that the party seeks to exert on its own tech sector is obviously going to spill over into any foreign companies that still have anything to do with it. So all of that, where we're really going, I think, is towards this bifurcation. And that's very important because bifurcation, I think, puts us in a position to win a geopolitical competition. I mean, fundamentally, this is a contest for power. It's not just economics. It's not just technology. It's military, diplomatic, ideological, the whole gamut. But in order to win it, we're going to have to win an economic contest. I mean, that would set us up to win the broader geopolitics.
Yeah,
and I think we're starting to see some signs of how this goes.
I wonder how strong the Chinese economy is anyway. China sliding into deflationary territory last month. The consumer price index there down 0.3% in July compared to a year earlier. Producer prices also down for the 10th consecutive month, down 4.4% last month, year over year. And the Journal is writing about it this morning, saying that the danger is that if the expectation of falling prices become entrenched, it could further sap demand, exacerbate debt burdens, and even lock the economy into a trap that will be hard to escape using the stimulus measures Chinese policymakers have traditionally turned to. Tiana, jump in here. I just wanted to mention this story because it is in, one of the most important stories in the Journal this morning. China's deflation deepens global risks. If China's economy worsens from here, that impacts the whole world.
Oh, absolutely. And we're seeing this younger generation is unemployed. They can't afford home ownership. This is why about a year ago there was that Evergrande bubble. How much did that portend what is to come? Will China just wind up having a demand problem because these young Chinese folks can't work? They aren't able to. It's about 30% unemployment rate for the youngest Chinese labor force.
I didn't realize. Jonathan?
Yeah, sure. So look, I mean, it shows us, it also reminds us how dependent this economy is on external demand. So exports is 20% of the Chinese economy. And I think this is very important because the macro factors are starting to come into play. I mean, the housing market, the unaffordability of housing, the youth unemployment that was just mentioned.
Yeah.
But it also, I think if we see this softening, if we see deflation and that starts to impact business investment in China, have, price wars there, I mean, it shows us that there isn't enough consumer demand in this economy. They still depend on the outside world, and that feeds back into what I think would be a very powerful strategy of economic containment. If we're able to reduce imports from this country and diversify to other places, you really start to slow down their growth and you really start to put them behind us.
Yeah, real quick, Jonathan, before you go, the CCP said that it reserves the right to respond to Joe Biden's executive order. What would they do?
Oh, they will. They will. They're going to go after our companies in their market. That's the card that they're always going to play. And our business executives need to realize, like, look, that was always coming. It's time to change course.